Well, top of the morning, everyone. Welcome to the Real Estate Show. I'm Alice Lema. I'll be your host today. I'm a broker here in Southern Oregon with John L. Scott Real Estate, and we have an absolutely fabulous show for you in front of us. We've got Mr. Giles, Mutual Omaha Mortgage. He's going to be our guest today, bringing the monthly update on lending. The Federal Reserve Bank spoke this week. He's going to bring us up to speed on all that. He also has some special programs for heroes and also small businesses. We're also going to talk a little bit about why the market is leveling and not crashing. So lots and lots of interesting things. You'll just thoroughly enjoy the conversation with Giles. So make sure you stay tuned for that. For a little bit of our market update, we still are in what we're calling a transition market. We're starting to get a few more listings on every week in all of the price ranges. The upper price ranges are still a bona fide buyer's market. So if you wanted that bigger property, that bigger house, maybe you're moving in with your relatives, maybe your relatives are moving in with you, that 800 mark, 700 mark, 750,000, 800,000 bona fide buyer's market. Those price ranges on up, lots and lots of properties to choose from. And those lower interest rates, even though they're edging up ever so slightly, still the monthly payments are more affordable than they have been for decades. So definitely good pickings in those higher price points. But we're also so happy to see some more inventory coming in the lower price points. I watched Old East Medford, Central Point, West Medford this week, Grants Pass, Klamath. We're starting to get a few more of those cottages on the market. The only thing is, though, a lot of those cottages have tenants in them. And, in the state of Oregon, we have very special procedures for dealing with tenants that are staying in their properties when they go on the market. So if you're hunting in those price ranges, you're an investor, first-time home buyer, then just be prepared and know the rules, and your agent will educate you. But you can finally have a few more choices, which is wonderful. And that's also another signal to a lot of us that the transition is continuing as the new listings start filtering down to those lower price points. So yay for us. And thank you to all those sellers that put their properties on the market this week. We're looking forward to quite a few more listings coming in the next 4 to 8 weeks. And normally in Southern Oregon, we're a little more seasonal. Things, kind of quiet down in the fall and winter, but we have a backlog of sellers from the COVID and the fires. And we have lots and lots of new properties coming on the market. So we have lots to talk about today. Do not touch that dial. We'll be right back. Well, good morning again, everybody, and welcome back to the Real Estate Show. I'm Alice Lema. I'm your host for today. I'm a real estate broker at John L. Scott here in Southern Oregon. And today we have our monthly update from Giles, Mutual of Omaha Mortgage. So excited to have you back, Guy. Tell us what's been going on.
Man, well, it felt like it slowed down for a few minutes, and now I think maybe that's over. All of a sudden, I can't work enough hours, so it's good. You kind of wait for those little breaks, and you think, man, I'm going to rest when you get there, and then as soon as you're there, it's kind of like, wow, am I ever going to do another loan? So you start, making some phone calls, and the next thing you know, you're just like, why didn't I just rest for a week? It would have anyway.
So you've been that busy, huh?
I have, again, and with me, if there's not a lot of contracts, then you're getting people just kind of pre-qualified, and then all of a sudden, then they all pop in at one time, and that's kind of the phase that I'm in right now. Everybody's finding houses, and I was actually just kind of preparing a couple campaigns to go out with for our Heroes program for firefighters, and as far as I'm concerned, I made a separate program for small business people, just because. As far as I'm concerned, those guys just surviving everything that happened, guys and gals, I should say, is
thank you.
So, well, yeah. Look, I'm pretty much surrounded by women that run businesses very, very well, and if I didn't have some helping me, I would be basically on the street right now. So I do know where
Well, and the small business is really the heart of our economy in a lot of respects. And I think you made a good point. It's been brutal the last 18 months on those folks. And it's great to hear that they made it through and they're able to call you and you can work with them and help them buy properties.
Yeah, we actually have a couple of different programs for small business owners or people that might not show as much on their taxes. We have some bank statement loans, and if you've been in business for 5 years, we can just look at your bank statements from last year.
Oh, really?
Yes. And
that's
qualify
cool.
you on that. On investment properties, if the property pencils out, we really don't scrutinize the loan a whole lot more. And I know that sounds horrible, like, hey, let's go back to 2010 and let everything crash. But if the property does not stand on its own, it's not something that we do. So as long as those numbers pencil out on that, we can get you into an investment property. And it also, one of the recent rule changes was that if you don't own a primary residence, you can't buy an investment property.
See, and that's different from, I mean, people keep thinking there's a crash coming, and it's like the rules are different. And what you're talking about is leniency, but it's not frivolous lending.
Right. I don't see, I mean, honestly, I don't know of any programs right now that are gonna crash this thing. I mean, now if you fire a bunch of people, for mandates, and if somebody really has doesn't want to get a vaccine or something, you lose your job. I mean, there's no control over that, obviously. But as far as lending goes, we have not really made any dumb decisions since the crash. I mean, I think
2008.
Yeah. Yeah. And just for the record, I was around two very, very smart women at that point, and they instructed me not to sell those option arm loans. And consequently, I didn't. I only had 2 people foreclose that I knew of through that whole crash.
Wow.
Because they looked me in the eye and said, look, you could make a lot of money on these things, but we've been in the business for a while and they are not a good thing to sell. And you know what? I did lose a lot of money not selling those things, but I didn't have people coming back to me because they crashed.
Yeah.
I had other people come back to me because they crashed, and I still had to fix it, but and try to help those people. But I think we've worked our way a long time ago through all of that, and we're loaning, making good loans, and
you're making good loans. Yeah.
So, but there is some really nice stuff, like I said, for self-employed people or people that want to get into the investment market. We tightened up for a while where they would only allow 7% of our portfolio. I say they, Fannie Mae and Freddie Mac, would only allow 7% of our portfolio to be investment properties or second homes. They've since kind of let off on that. So things are a little bit more back to normal when it comes to those programs. That was tight for a little while because a lot of people buy second homes here and eventually retire. So we got some relief there. Gosh, what else?
It's been an incredible, I mean, we haven't talked to you for a month, and now we're just starting November. And the market is still, moving at a good pace, and it sounds like you're busier than all get out. Yeah.
I mean, I'm not going to say I was where I was, 5 months ago, but it could get that way really easy with the amount of pre-qualifications that are coming in. And again, that's just kind of where it starts. My kids grew up in a neighborhood up in East Medford, and I had this 4-mile loop that I walked every night. Yeah, I'm that old dude that you just see walking every night with his dog. But this time of the year, it's beautiful with the trees. And I walked it last week, and I saw a lot of signs for houses. And I thought, oh, here we go. And then a couple of days later, I grabbed my wife after church, and we took that walk, and 3 of the houses were pending that were on that little loop. So yeah, definitely things are moving. We're seeing that. There was a little bit of a scare for a minute, and but I think everything is just kind of going to settle in. The people that have had jobs, still have them, and they can actually command a little bit more for what they do for a living. So who knows?
Yeah, there's a lot of that going on. People are shifting into other jobs, making a lot more money. And that's where it starts. If your income goes up, your purchasing ability goes up, whether it's houses, cars, boats, whatever.
No, that's nice. I mean, I think there was probably a little bit of weird fake stuff. Every time they just infuse the whole country with money, of course, you're going to get some commerce and you're going to get some things. And I think the Fed is finally at a point right now where they're saying they're going to taper off some of the mortgage-backed securities, and that has caused a little bit of fear when it comes to mortgage rates, because obviously that kind of undoes your raise. But I really don't think that it's going to affect it like some people do, because their portfolio that they have right now, they're not getting rid of that. They're tapering off some of the new stuff that they're buying. So the majority of it, over 80% of it, is not going anywhere, and they will keep reinvesting in those mortgage-backed securities, and that's going to help keep rates down.
That's a very, very good point.
Yeah, so it's not as dire as a lot of people will make you think. Will rates go up a little bit? Probably in the near future, not a ton, but I thought about that just for a second before the show, and I did some really quick crude math on that. And if you're buying a $500,000 house, realistically, a $400,000 loan is not out of line right now. It's just it's probably a little high for an average, but it's pretty typical for the things that I'm seeing lately. Your payment would go up about $110 a month, and that sounds like
really,
yeah. So it's not end of the world stuff, and I'm not saying we're going up 0.5%, but I just kind of wanted to break it down into some kind of a number that would make some sense. So over the life of the loan, say you're at 3% at a $400,000 house, you're going to pay $6,000 back. That's the ugly number. That's the reality in this thing. You're borrowing $400,000, you're paying $600 back. You think, oh my gosh.
Well, that's over 30 years though, right?
Right. Yeah. And so if you're 0.5% higher, you'll pay, say $40,000 more. But at the end of that time, you have a house. I also did an appreciation at about a quarter of what we appreciated last year, because obviously that is not sustainable. Kind of more of an average, about 4.3 is what I've always just kind of seen. You have a $1.8 million house. So instead of buying somebody else's rent and paying for their mortgage, if you can get into a house, if it's not your dream house right now, if it's into something, just getting in the game. My first one was a single wide that we used to decorate with putting a plant on the tongue, and that's where we got started. But I made money on that property, believe it or not, because it was actually attached to some land. And, at the end of all that, like I said, you're going to pay rent anyway. You're going to have rate increases. Historically, they've been about 6% per year. And now you have a $1.8 million piece of property at the end of it. And, in my case, the second house that I bought, I just still have that I paid $137,000 for, that I could easily sell for $480 right now.
But I want to stop you right there, because back then, it sounds like a very little amount right now, but back then, weren't you stressed about how am I going to make the payment? Is it going to appraise? The mindset, it's like you hear these numbers and you think, well, back then that was a bucket of money, right?
Oh my gosh. Yeah, that's the same conversation, because when I sit with people, and I definitely try to have some sort of a meeting with first-time home buyers, and it's a little more difficult to see through a mask, but I can tell what's going on with their eyes, and fear is fear, no matter what.
Fear is fear.
Yeah.
But they're worried about the big numbers. And I like what you're saying is that don't let the big number, don't let 400 scare you. Drill down and find out what that's really going to mean to your monthly budget. That's where it counts.
Well, absolutely. And there's other things that, at least for the time being, and it looks like they're not getting rid of it anytime soon, you still have interest that you can write off. And if you're under a certain income bracket, you can still write off your mortgage insurance. And, so other than just the sheer appreciation of a house, when you look at the whole thing, and you factor in those tax write-offs too, and that's probably
then there's that
the difference. So, I usually try not to lead with those things with people, because, they're excited and wanting to buy a house, and I really want to talk to them about real numbers. But by the time I'm done meeting with them, I do have those conversations, because it's a nice thing when you get your tax bill in the mail. That's not a nice thing. They're generally paid for, by the time you get done. But when you get to write that off on your taxes, it all adds up to your bottom line at the end of the year.
It really
And
does. What I tell people is you can just make it through that first year. And that first year is frequently a struggle, whether it's 100,000 because that's where the market is, or 400,000 because that's where the market is. It's that payment. And it takes a whole year to get used to it. And then you get your taxes, and then you start getting raises, your jobs get better. And then, then it's like you sitting here all those years later going, look what I did when, and I still have the house.
well, yeah. And I don't regret any property that I bought, and I didn't try to buy it and sell it in 4 months, so I've been pretty lucky there. I never got into that thing, but absolutely, it's just a part of your portfolio. I mean, the stock market has been going crazy and people have been making very good money in that. I'm not, suggesting pull money out of the stock market to buy a house or something. You can borrow against your 401k if you want to. You pay interest back to yourself. So there are some ways to get some money to buy a house, but it's just if you're not well rounded like you could be if you don't have this at least as part of your portfolio.
Yeah, your financial security should include some real estate. I agree.
And the only thing, one of my little things that I came up with is the only thing that sucks worse than mowing your lawn is mowing someone else's lawn.
Okay, well, hold that thought. Guy Giles, Mutual of Omaha Mortgage, one of our sponsors. We've got to take a quick break here. We're brought to you by Guy Giles, Mutual of Omaha Mortgage, John L. Scott of Southern Oregon, and our local Rogue Valley Association of Realtors. I'm Alice Lema, broker. John L. Scott. We'll be back with you right after these messages. Do not touch that dial. Well, welcome back, folks, to the Real Estate Show. I'm Alice Lema, broker John L. Scott. We're here having our monthly update with Guy Giles and Mutual Omaha Mortgage. And one of the things you mentioned early on in the last segment, Guy, was the Heroes program and the small business. Let's circle back and talk more about that because that sounded really interesting.
Yeah. Part of how we could buffer ourselves, I guess, for lack of a better word, from the rates going up a little bit. And by the way, I do not think there's any appetite for them to go through the roof. I think they'll probably continue to bump up a little bit, but the economy's not cured yet. And I really do believe that there's an appetite to keep them low. And even though they'll bump up a little bit, and they have bumped up a little bit from their very, very bottom, they're not going to go crazy. And I do anticipate a little bit of relief as far as the rates go, because it's just a huge part of our economy right now. And it's actually the one light that's actually shining still, pretty bright.
The housing market is pulling us out.
Yeah. So on these programs that I'm doing for small business and for Heroes, and I'm including union members in that also. There's just a ton. I was in the union for years and years. We're basically given 0.5%, and I know that may not translate to anything for a lot of people, but it's basically, you can take the word point and put percent in there, so it's 0.5% of the loan amount. So on a $400,000 loan amount, you have basically $2,000 to work with, not $200,000. So we could buy down your rate with that. We could give you lower closing costs. We could wipe out appraisal fees. A lot of times we're able to get them to where those things are waived these days anyway. But we could just, if we can get you a 1/4 point lower rate by buying down the rate with that, or an 1/8% rate, that absorbs half of that money that you'd be dealing with the higher rates anyway. So it's not a great way to explain it so far, but it actually, there is a big benefit. And, if you're out shopping at one of the local places that doesn't have one of these programs, it doesn't take but 5 minutes to talk to me and I can line you out. And if I'm truly not better, which I would be very, very shocked, I'll send you on your way, and you'll know that you at least did your due diligence when it comes to this now.
So this is a program called Heroes, and it's for teachers, police, fire, union, medical worker, like what?
Yeah. And if you're out there and you're a tech working in the hospital, as far as I'm concerned, the way we've structured this program, you're included on it because you're still out there. You're still on the front lines. You're still, you worked through this whole thing when a whole lot of people didn't. And so if you're anywhere, the dispatch operator, I really want to make this at least while we can, kind of for everybody. That's just out there working and protecting us when we're asleep.
So these are programs for those folks, and then the veterans program is separate, correct?
Yeah, I don't charge any bank fees to veterans at all. So
that's awesome.
Yeah, I haven't for a long, long time. They decided they wanted to try to go lower rates and charge a little bit of those for a while. That lasted a very, very short time. So I've really, with this company, never charged veterans bank fees. And we actually, for every VA loan we close, we do donate money back. I don't usually like to talk about that kind of stuff, but as a company, we do donate back to, the Wounded Heroes, to a whole bunch of different organizations.
Oh, super cool.
So yeah. And I don't know of anybody that'll beat our VA stuff either. Just rates. And then you throw on top of that you're not paying, in a lot of cases, $1,800 in bank fees, for that. It's actually, nobody's going to get close to me on those either around here. I don't. Well,
and in a different market, sometimes we can get the seller to contribute to that. But, depending on how hard you're having to arm wrestle people for a house, it's really great that, as a lender, that's not even going on the books.
No, I'm starting to see a little bit of relief when it comes to, the sellers aren't making you come over and mow their lawn for the next 3 years as
but during the height of all this frenzy during the shutdown, we had a bunch of sellers that negotiated yard cleanup from the buyers, and they got it. They got over full price, all this stuff, and the buyers had to come clean the yard. You're not that far off.
I felt bad when people would show up here with a lawnmower stuffed in the back of their Honda. And, I was like, where are you going? They're like, hey, this was just part of the deal, man.
I won the bid.
God.
So, yeah, and we're not making light of people who struggled through, to win a house. We're not, we don't want to sound like we're being insensitive, but I think Guy and I are both shocked constantly at what people have to go through to get a house sometimes.
It's crazy. And just to, on a personal note, I remember going and mowing the veterinarian's lawn when I was first getting started out to get my dog looked at. And I didn't,
Oh, like a trade? Like you're trading?
Yeah. Uh-huh. And mowed the guy's lawn out on 140.
Wow.
Or 62, pardon me. Everybody will probably know exactly what place I'm talking about there. But
I hope we don't get a phone call.
It grew back by
Guy, you're 25 years late.
Gosh, I did get it done. I mean, affordability is always, has still been a little bit, of an issue as far as that goes. But there's been some relief in some other ways. Yesterday, I had some people that they had to get mortgage insurance. They didn't have the 20% down, but with 5% down, they had good credit, mind you, but their mortgage insurance was like $43 a month.
Oh, that's way lower than it used to be. What changed?
They've just gotten a lot more competitive. They've made it a little bit more driven on credit scores. And that was actually the really big change is used to it. Just kind of, they had their flat little fees and no matter what, and there was a little bit of change for credit scores. Again, these guys had decent credit scores, but you would really be amazed that if we can put you into a conventional loan. In the old days, everybody would just flip you into an FHA loan automatically because the mortgage insurance was just cheaper, and that would give your buying power. And but unless your credit is really, really poor, I try to figure out some way to get you into a conventional loan because you're just not going to have that mortgage insurance for the life of the loan. And
I don't think people realize what happened. I can't remember when it was, but just like you said, the FHA program changed and now you have that mortgage insurance forever. Yeah. And I like the idea of having people go into a 5% down conventional because at least when the asset has 20% equity, you can petition to have the mortgage insurance removed, even if it is only $40 a month. How many lattes is that?
I know it adds up. You figure $100 made it up to, what, 39,000 over the life of the loan. I mean, if you're paying mortgage insurance, especially if you're paying that FHA mortgage insurance, if you have a large enough down payment with them, it will go away eventually. But for the most part, that's not the people that are doing an FHA loan anyway. So,
right.
anyway, you can just pretty much count on having that for life. And with rates low right now, you don't know what it's like later on. Once you have that equity, you're going to pay a couple $1,000s to refinance your house. You don't know where rates are going to be. So I just wouldn't count on going into FHA that, hey, I'll just refinance into a conventional loan later on. If we can get you into the right program now, it's going to save you money in the long run.
Well, and you have the certainty, and that's the thing. This idea of like, well, I could do FHA now because my credit score is weak or this or that or whatever, and then I can refinance later. Well, maybe not, because what if the rates are back at 5, which to us old timers is still free money, but that's a huge difference between 3.2 and something in the future. So that certainty is very valuable.
Yeah, and if any lender out there just automatically starts talking to you about doing that, that's a red flag,
Doing what, the refi?
Yeah. Basically planning on a refi. And I mean,
when you make your purchase. Yeah.
I have heard of lenders doing that where literally it's part of your plan. And I'm going to call you in this many months and we're going to do it, just give me a call. It just takes a minute or two. Maybe that is the right plan, but a lot of times I've found that it is not. And people had already been pre-qualified. They were all ready to go on a FHA program. And if I can get you into something more conventional, you're really going to be happier in the long run. It's going to probably mess me out of a refinance, but I haven't been doing the thing for the money for a long, long time. I just try to do right by people. And consequently, I've been really blessed in my business.
Yeah. Well, and if there's a reason to do the refi, that's different. But I think what I'm hearing you say is if you're just buying a house, you don't have any special circumstances like partners or this or that, then just a straight regular home purchase. Why would you have a conversation? Why would the lender talk to you about a refinance? That doesn't make sense. So I think that is a red flag.
Yeah. And, a couple other things to mention. I've been actually got a couple contracts in with Hayden Homes this week. There's Jeff Addington over there. Yeah. I think they've opened up. They're going to have 300 more houses. And one thing with the new construction stuff that I've really been impressed with is I remember when I bought that first house for $137,000. First thing I had to do was put a roof on it. Basically, I don't know how that happened to me, but it did. And it's just nice as these storms come, as everything happens, as the heat in the summer, and you're in a well-insulated house. And if you're thinking about that way at all, I do know that there's been a lot of regulation that's come into how they have to build these houses now up to some of these standards. So it's going to start increasing the cost on some of them. So I did just kind of want to throw out his phone number real quick, 541-329-9086. And I don't know, it's Jeff Addington over at Hayden Homes. He's actually a really good guy. You could bring Alice over there so you have somebody to represent you. And the last thing, I'm not sure exactly how much time we have left, but everybody knows of Zillow. They laid off about 25% of their workforce this week.
Because their business model isn't working.
No. And they have been shady for a while, as far as they would go in and they know where people are looking for properties. So say they get a lot of high traffic in Coeur d'Alene, Idaho, and they would go in and they would buy up a bunch of houses in Coeur d'Alene, Idaho, knowing that there's a ton of interest there, and then drive up the prices. And, because now you got all these comps, they sold all these houses, turn around and sell them back as a profit. And I think they're going to take about a $327 million loss. Right now is what they're talking about. Their stock dropped quite a bit and they're getting out of the house flipping business. So that's probably a good thing, because you want an expert. I just had Teresa McCants find a sewer problem on a house that these guys would have never, ever notified. The guy called me up. He was so excited that his real estate agent found this. And, if you're not doing the due diligence, there's no way somebody in Zillow in Seattle knows that this house had a major, major sewer problem with it. But she found that out, and he's going to get a different house. But you want that local agent that knows what's going on and knows the market. Anyway, there's my plug for you guys. But I really,
yeah, there's hardly any buyer's agents in Southern Oregon that recommend sewer scopes, but I've gotten stuck with that bill myself. So definitely recommend it. Well, we're going to have to take another break here. Guy Giles, Mutual of Omaha Mortgage. Thank you so much. We always love your updates every month. We'll be back in just a moment. Do not touch that dial. Welcome back to the Real Estate Show again, folks. Alice Lema here, broker John L. Scott, Southern Oregon, having an update with Guy Giles, Mutual of Omaha Mortgage. And it's been a month since we've talked. The rates are threatening to go up. They've gone up a little tiny bit. And then everybody went into a wild panic. So the Fed had some kind of an update this week, Guy. What did they say exactly?
Well, the main thing is so far, what they've talked about is, with a lot of the pandemic just kind of running its way down a little bit, at least as far as hospitalizations, and you could argue that stuff either way. But that said, they feel like they can pull out a little bit. I think I mentioned it a little bit earlier as far as them tapering off. I think about $5 billion a month. Sounds like a big number to us, but it's really not to them. The vast majority of the money that they're investing to try to make sure rates stay low is still in that market, and they will just continue to reinvest that, even if they're not adding a ton more to it. They will still be adding to it, just not quite as much. What I'm basically seeing as far as the markets go, there's no appetite for rates to go way up. So I really do believe that we will have good rates for the near future. And on top of that, I think that if these guys would quit trying to add in every crazy little thing to this new stimulus bill, there's some money in there that could actually help, some of the lower income people, some people actually get into a house. I'm going to reserve all my feelings
because we're not a political show.
Yeah, I'm not a huge proponent of a whole bunch of stimulus either, but they're really,
and economically, those are not long-term solutions for sure. Yeah.
But with all of that, I think if you're thinking about buying a house, the big thing to do is find yourself an agent that you trust, that work with that agent, because if you're flipping around to a whole bunch of different ones, I just saw this recently, is why I thought about it.
People changing agents in the middle of their deals.
Oh, not in the middle of their deal, but while they're looking, all of a sudden I'll get a phone call from another agent. And it doesn't happen much, but unless you have like a real problem, that agent knows what you're looking for. And, and to reinvent that every time you find a house, just doesn't seem like a great idea. But, get your agent in line, come in. We're actually doing full credit approvals for people. So I'm not just doing the Quicken Loan thing where I tell you I'm a rocket scientist and put down what I think I make and all of that. And next thing you know, I have a letter and some person across the country that doesn't have a vested interest if your loan closes or doesn't close. So fully credit approving you is going to make your offer so much stronger when you walk into an offer situation. If we say, look, we're waiting on an appraisal and we may not even need that, that's a whole lot stronger way to go in than just plugging your stuff in. And
those online lenders make the sellers nervous, regardless of what our experience is. Even if you're not in a multiple offer situation, an online lender does not always feel comfortable or safe to the person you're writing the offer to.
Well, it's back to my canned soup theory. If I mess a deal up, I'm ducking at Costco all the time, worried that someone's going to throw a can of soup at me. These guys,
I hadn't heard that.
Because I make up these dumb things, but their philosophies I live by, and that's why I got to do a good job for people. But they don't, they just have a constant flow because they're advertising at the Super Bowl of people coming in. So it really doesn't. Of course they want to close loans because that's how they make money. But you get a little problem with a well or a septic or something that we understand out here. We're right here to work with you through it. My processors are right here in my office. Everybody is. I have, full access to the whole process, and I'm not going to duck and hide behind a message machine if something's going wrong. We're just going to fix it.
And it's nice that you do the full approval. I don't think people understand. Sometimes other lenders are doing a two-step process where they're just doing minimal pre-approval and then they do the full qualification later. You guys are taking the time to dive deep right from the beginning. So when you write a letter, the seller can really bank. Also, the buyer can too really bank on that happening.
Oh, it's so much less stress. It really is. But how about you? I mean, what have you been seeing? I don't get to ask a lot of agents.
Well, it's so interesting out there right now. We still have protocols for COVID. And we still have, I get asked a lot if I'm vaccinated. Now I'm getting asked if by sellers, whether it's my listing or not, just to show a house, the buyers and sellers are asking each other if they've got the booster. So that's been very interesting. And then we have more and more listings coming on the market, but they're being purchased. Like you said, you went for that walk, and then a week later, 3 of those houses were in contract. So I agree with you. I don't think we have a crisis coming. I think the market is absorbing the new houses that are coming online, and it's actually giving some breathing room. I'm predicting we're going to have an even bigger number of sales in the next 6 months, just because we have more houses to choose from. And then people will finally start listing and buying at the same time. So I'm looking forward to seeing our numbers go up, but that's just, an Alice prediction.
Yeah. Well, all the numbers that I'm seeing, they're still anticipating over 11% appreciation for next year. I mean, again, that's not sustainable forever. But I think as this pandemic winds down and people that are really truly scared and hiding in their basement right now, that was not a dig. Maybe subconscious.
We'll just keep going.
But as they're able to start moving around, then they're still going to have the ability to work remotely. And I think a lot of those people are going to flood this market around here, because who wants to do another pandemic in a place down in LA or a place down in San Francisco
or Manhattan? Yeah.
You're going to want to go to a nice place. So I think that this place is some place that people are always going to want to come to. So anyway.
And some of those urban markets are experiencing a downturn, maybe not a crisis level, but some of their values have gone down enough. Even people who would have stayed are a little unclear about their future, and they're selling. In some of those urban areas, they're selling just because they want to take the money they have. So, it's that spiral thing of mentality that starts happening. But who doesn't want to live in Southern Oregon? Oh my gosh, it's like the perfect place. At least for us, right?
Yeah, it's amazing. I traveled up to Leavenworth last week. I was going up into Canada, and then they changed the rules at the last minute. So we ended up running around Washington to go just look at the trees and everything. And I come back here, I'm like, why did I go? This is nothing here. It's beautiful.
Yeah. When there's no fires, it's the perfect place.
Well, yeah, and the trees, the colors around here are just amazing. Don't tell all my biker friends about that kind of stuff. I'm trying to keep up my tough guy image a little bit. So as far as me enjoying the trees around here and all that as much as I do, but I do every year.
Yeah. Well, Guy Giles, Mutual of Omaha Mortgage, ever entertaining, ever educating. Always great to have you on the show. We'll have you back again next month. That'll be early December, and we'll talk again about what's happened in the weeks to come. This broadcast will be repeated tomorrow on Sunday at 6 p.m. on the same station, KCMX News Talk Radio 880. We're thankful for our sponsorship from you, Guy Giles, Mutual Omaha Mortgage, John L. Scott, Southern Oregon, and the Rogue Valley Association of Realtors. You can also check out our website, realestateshoworegon.com. Sorry. I'm Alice Lema, broker John L. Scott. Have a beautiful Southern Oregon weekend. Thanks again, Guy.
Hey, thank you.
Have a great weekend. Bye now.